In our experience, it's quite common to see the market moving the opposite way after Fed Day. Whether or not this continues remains to be seen, but there is a pattern of the market only hearing what it wants to hear in the initial aftermath before then reconsidering the following day. We would argue this could definitely be the case today. Naturally, this argument holds up because this is exactly what we're seeing. The US dollar is coming back a bit while stocks are selling off a bit. But we think this could be the case because there really wasn't much in yesterday's decision that was overly accommodative as far as the communication went. The Fed raised by 75 basis points as expected, and the Fed chair said decisions going forward would be less about forward guidance and more about the data. So, yes, we could see how there was room for the dollar to sell off and stocks to rally on the basis that the Fed didn't deliver 100 basis points of rate hikes, and the door was left open for the Fed to focus on things beyond forward guidance that might otherwise lean more hawkish. At the same time, we just got a back-to-back 75 basis point bump, and there was every indication that if inflation continued to shoot higher, more aggressive rate hikes would be forthcoming. And so as we consider where we're at on this Thursday heading into the North American Open, we believe there is good reason to believe we could once again see risk-off flow creep back in. At a minimum, we definitely recommend proceeding with caution, as the post-FOMC reaction seemed to have felt like a reaction one would see with the most dovish of communications, and this simply wasn't the case. Looking ahead, we get US GDP and US initial jobless claims to take in. That's all for now.